Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a fantastic day, and without further ado, let's jump right into it. In news that for some reason everyone thinks is absolutely incredible news, fintech firm Ripple has announced their intention to acquire something called Fortress Trust, a financial institution that specializes in Web3 technology. This move aims to fortify the technological foundation for businesses and financial organizations entering the Web3 ecosystem. Web3 has become the new STO, ICO, even I dare say the letters NFT as well. There's always a buzzword that buzzes around the cryptocurrency space, and Web3 just happens to be the new one. For those of you who are unfamiliar with or have forgotten exactly what Web3 is meant to be, the generalized idea is that Web 1 was basically supposed to be the internet around the 90s. Not a lot of connectivity, we had dial-up, everything was very slow. By the time we get to Web 2, this is currently literally where we are now. The idea then is that crypto gives the opportunity for Web 3. So it is a thing and isn't a thing. It is currently said to be being built. It will be laying on top of the old system, and everything will run on blockchain and cryptocurrencies, and this is kind of the generalized idea. Web 3 just happens to be one of the many and or very few things, depending on how I'm looking at the market, that I'm not at all bullish on, because it's just another buzzword that probably will not lead to many things. Many of you out there may disagree, but once again, I've been here in this market for a very long time, and I know when a buzzword actually comes about. If we are still hearing about Web3 in like the year 2027, it's definitely here to stay. But the idea is that in the future, once again, everything will be built in or on a metaverse, on a blockchain, something cryptocurrency related, what have you. And many of the things that we have already gotten from Web3 have kind of been more centralized than they should have been. Web3 is meant to be the decentralized web for everyone around the world. And this is why a lot of times I've told a lot of you, if you hear that there is a company claiming to be decentralized or a decentralized exchange, they usually end up not being decentralized in any kind of way. So upon the news that Ripple has acquired Fortress Trust, for some reason, everyone thought that this was like, and I mean like not in a joking manner, people were pretending like this was the greatest news that we've ever gotten about Ripple, which leads me to believe that people just aren't paying attention to everything else that's going on. We didn't get this much attention when we heard that they were working with 30 central banks. We didn't get this much attention when we heard that they were working with 16 different countries to also build up their infrastructure or anything else that the company Ripple has done. But upon acquiring Fortress Trust, which will allow them to get into the Web3 space, this did it for everyone. According to a blog post published by Ripple, forecasts indicate that the enterprise crypto and blockchain sector will reach an estimated value. I assume this is a typo. It has 250 billion. The number should be 250 trillion, as we are far more than a $250 billion market by the end of next decade, expanding at a CAGR of 54.5%. Ripple says that as this sector matures, the demand for licensed and compliant technological infrastructure is becoming increasingly critical. Ripple's planned acquisition of Fortress Trust aims to act as the foundational layer for various services, including but not limited to payments, as well as asset tokenization, which I also found a little interesting. I guess this is going to be, I would assume this is going to happen off-chain, and I say that because you can already make payments on the XRP blockchain. And as far as asset tokenization, you can already do that on the XRP blockchain as well. This has to be some type of outside institutional acquisition thing that they have going on. This is intended to facilitate a smoother launch and more efficient scaling for B2B clients. The acquisitions align well with Ripple's existing business and product strategies, filling a crucial gap in the enterprise crypto market. Not really much more to say. Much of the article and this other articles basically expand on the idea of how amazing this is for Ripple and everything that they have and what they're going to do and how amazing this is. And you kind of get the idea. Cool. Not the largest news I would say that we've had from Ripple, as they have, partnered with countries. But this news was incredibly popular. And I would also dare say tying directly into this, just so we can kind of like scoop all the Ripple stuff together. It says Ripple's recent acquisition of Fortress unlocks yet another license for the blockchain company. So apparently Ripple we had news about this about 2 weeks ago. The company Ripple, regardless of the term the United States, there is not one form of paperwork that they have to get done, one license that they need at any given time. So now they have apparently acquired another license in Nevada. Was it Nevada? Yes. So apparently the Fortress thing that they just acquired apparently gives them license size within that state as well. And therefore, I know there's no way on earth that this became major news because they got another license. Like there's just actually no way. They talk about Nevada's population, and that's supposed to be a major thing as well. So yeah, the last we heard, they have 30 money transmitter licenses within the states. I assume this is now 31. And they also have a New York bit license as well. Cool. Anything Ripple ends up being popular news. It's just kind of the way that things are. Anything Ripple, Coinbase, Binance, Kraken, Gemini, Cardano, Bitcoin, Ethereum, I think that's like the top of the pyramid as far as like always being popular news in the news kind of thing. So cool. They have another form of paperwork for Nevada. I assume that brings them up to 30 states because it says 30 here. Now we're talking about number 31. They have the bit license. And also they have acquired a company called Fortress Trust. Cool. Amazing. Awesome. I think the other Ripple news was bigger, but that's just how the news works. That's the Ripple news. And yeah, let's move on. Also I wish every single cryptocurrency exchange was doing the exact same thing. The world's largest cryptocurrency exchange, Binance, has published their 10th proof of reserves report. According to the report, users hold approximately 588,000 Bitcoin and 3.89 million Ether on the exchange. So for those of you who don't remember, for those of you who are new here, around the time that we had the entire Sam Bankman-Fried FTX fiasco, there were a lot of people calling for more transparency within the cryptocurrency space. This was kind of a Sam Bankman-Fried's a monster. We need to make sure that everyone in the cryptocurrency space is doing their part and showing transparency and blah, 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 blah. 99% of all those people who were screaming that from the top of the mountain have gone completely silent. And now I think we only have 3 crypto exchanges who are actively doing their proof of reserves. I believe it's Binance, OKX, I think it's OKX, and there's one other one. It's not Coinbase at all, who are actively showing that they actually have the money that they claim that they have. The idea being, a lot of times before, when it comes to a bank run, people go to the bank and figure out that the bank doesn't have all their money. There was fear after the FTX collapse that other crypto exchanges were doing the exact same thing, and many of them probably were. But the idea was if people ran and tried to get all their crypto out of it, would there actually be enough? So every quarter, Binance actually releases new information that says, hey, we have all the money that we told you that we have, and we actually have a surplus of it. That's why for those of you looking at the screen, it says they have 105% Bitcoin, meaning 100% is the amount of Bitcoin that are actually from the users, from you, your money on Binance. However, they've topped it up with another 5% on top to make extra sure that if you take all of your money out, there's still money left over just in case. That's the generalized idea. That's why I said I wish that every crypto exchange did this as far as like the transparency matters. These people are holding billions of dollars, and a lot of people within the cryptocurrency space are, at least in my view, incredibly shady and have been for a very long amount of time. So it's nice to see that at least the largest crypto exchange has continued to let people know exactly how much money they have on their platform. They have a 105% ratio for Bitcoin, 105% for Ether, 114% for Binance Coin, which is their coin, so I would assume. They have a 118% ratio for Tether, which they recently announced that they were going to be like kind of dealing more with recently with the whole Paxos thing. Binance US dollar 106. Coinbase's coin 102%. Litecoin, they have nearly exactly 100%. And XRP, they have a 103% ratio. Is this the exact same thing over here? Yep, another article talking about it as well. So cool. Wonderful. I hope they continue doing this. It is nice to see transparency when it actually needs to be done. We don't need to know exactly how much each individual person has. There does not have to be a name attached to it. It's more of a, if you are claiming that you are holding this much money and that everyone's money is safe, because we've been in situations before where people have tried to get their money from cryptocurrency exchanges, and guess what? The money wasn't actually there. This was, stuff that happened years ago. If you're going to claim that you have it, show that you have it. It also brings down a lot of tensions within the space as well. That's the Binance's 10th Proof of Reserves report. They have everything that they said that they have, and yeah, let's move on. Also this is another one I'm going to try and stand directly in the middle, but I know I'm going to be swayed to one side or another just because this entire conversation has been going on for so long, and this prolonged nonsense that we've been receiving. Once again, I'm not even in the States. But it is abundantly clear that things happening within the States ripples throughout the rest of the planet. So every time that there's something with regulation, lack of regulation, prices falling, no ETF, blah, 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 within the cryptocurrency space, it affects everyone else's money. That's kind of the point that I'm making. So this is a conversation that has been had since around mostly 2015, 16, ramped up in 2017, and we've been having this conversation literally every other day ever since. And now we've gotten to the point where this is why I rolled my eyes, because I was like, okay, sure. Wow, that's absolutely amazing. Can't wait for that to happen. A commissioner with the Commodities Futures Trading Commission, or the CFTC, has proposed the first ever pilot program within the United States to support the development of compliant digital asset markets and tokenization. The regulator emphasized our principles-based framework is built for innovation in technology, new products, and market structure, end quote. You know where this is going. The United States, people and companies within the United States have been asking for cryptocurrency regulations since back around 2012, 2013. The first people to do it were the Winklevoss twins. And since then, there's been basically nothing. I don't even know if people know how much they have to pay for taxes for crypto. Like, I simply don't know what's going on over there. But as far as like regulation goes, companies and citizens have also been asking for rules and regulation, because if you keep saying that our market is almost at free willy, our market is free range and everything's going crazy and full of criminals, well, give proper framework and regulation so that can actually no longer happen. Back around 2020, the end of 2020, when we first got news that people weren't too keen about the SEC, we started getting news that apparently there were a lot of whispers that the people wanted the CFTC, the Commodities Futures Trading Commission, to take over instead of the SEC. There was also a report that showed that the CFTC, I think, has 10%, I think that's it, of the budget of the SEC. So they're basically being thrown around by the SEC, who has the most power. So to put put forth a proposal like this to say that now is the time that the CFTC is going to come forward to try and create cryptocurrency regulation, it feels not even like a little bit too late. I feel like if the CFTC had done this in 2012, 2013, they probably would have had control over the cryptocurrency space, and we would have had none of these issues that we've had over the last decade or so. But even more so, when they saw, and this goes back to the entire Hester Pierce thing, Hester Pierce being one of the workers for the SEC, who has openly said that she does not like people working inside of the SEC and that Gary Gensler is basically a monster. We heard a lot of people back then saying that the CFTC should take over, step up and stuff like that. But that was also like 4 or 5 years ago. So it's like, cool. It's nice to once again announce that something should be done, but it should have been done years ago. It's kind of like all these people from the Senate and Congress in America who were like, we need crypto regulations. And it's like, well, you know, you're one person. You're not going to get this thing passed. Why weren't you sticking up for us back in 2017? You know, what's the delay when it comes to like, oh, now we have to help our citizens. Commodities Futures Trading Commission Commissioner Caroline DePham, that is PHAM is her last name, unveiled her proposal for a regulatory sandbox program to regulate crypto assets on Thursday. She posted this apparently on Twitter because that's where the world needs to know what's happening. She said, and I quote, "It's time to take action. I propose the first ever U.S. pilot program for digital asset markets as a regulatory sandbox to test, gather data, and examine innovation. This creates a safe framework for new technologies and market structures under existing regulations and protections." End quote. A lot of other countries have already done sandboxes. I think a lot of places within the Middle East were like the first to actually do this. The idea is you set up a hub, an area, usually within a city. This is the way that it worked, at least in Dubai and other places, where you basically tell people, hey, within this 8-block radius, 8 blocks by 8 blocks, this is where you can do business. Everything you do, everything you say, everything you test, you send all that information to us, and we basically make sure that you are regulated to the moon and back. And this is now what the CFTC is proposing. It's not that it's a bad idea. Why not say this years ago? Why wait for this moment? Why wait for so many people to have left the market? There was an article. It's not here on this here. It was an article. I'm sure you can find it as well, talking about the amount of money that the U.S. has lost because they haven't given proper cryptocurrency regulation. How much money has flown into other countries and other continents because these people knew exactly what the regulatory situation was before they got to Asia or to parts of Africa or Latin America or to Europe. It's just very weird. I still feel, and I mean in a completely logical sentence, there's definitely some weird activity happening behind the scenes when it comes to money. We've gone over that before. When you talk about Bitcoin potentially at some point hitting $1 million, $5 million, $10 million, of course there's going to be big players and, you know, in the works. We can only, you know, you get what I'm alluding to. So cool. The CFTC has put forth a proposal. I assume this has to be voted on. I assume it has to go through multiple channels. I assume this will not happen by the end of this year, nor will it happen by next summer. So cool. It's nice to say things out loud and be like, we should have better things, but you know, you actually have to work towards it and make sure that your citizens are protected. Because it seems like no regulators within the United States actually cares about anyone who they claim to actually, you know, when you work for the CFTC, does anyone know this? When you work for the CFTC or the SEC, do you have to take like an oath? Like, I will protect citizens. I will make sure that their best interests will be. Is that a thing? And I ask because doctors have to do it, lawyers have to do it. There's always like an oath that you have to take that you'll be your best person, because if they did take an oath, every single one of them is lying at this point. Anyway, that's the CFTC said on Twitter, you know, the most important place ever, that we need proper cryptocurrency regulations, and they're maybe trying to make a sandbox for it. Fantastic. Wonderful. Can't wait for it. Okay. All right. Let's move on. Also sure, why not at this point? I'm sure that a lot of you have seen this news over the course of the last couple of weeks. I've mentioned before to all of you thousands of times, a lot of what happens in the cryptocurrency space is meant to manipulate you and make sure that you get scared and you sell off your assets. This will not happen to everyone, but I'm certain that I am talking to right now some of you who have gotten afraid of where the market was moving and you sold off your coins. And what happens is, and what probably may already have happened, is that you try to buy back these coins, but prices have gone up higher than when you sold them, and therefore you're buying in at a higher price, and you then have less crypto than you actually had before. The last couple of days have been a very odd, weird situation. I mean, backing it up. Every day, the news within the cryptocurrency space is very weird. However, the news over the last 2 or 3 weeks has been making sure once again to focus nearly exclusively on Sam Bankman-Fried and FTX. You would not believe how much news there is and how much of it I'm not putting it into a video because it's just absolutely nonsensical. For those of you who were here last week and you missed the video, there was a news article that Sam Bankman-Fried's battery wasn't working and on his laptop. And what was the other one? One was that he was only eating peanut butter sandwiches. And then what was the other one? I don't remember the last one, but they're all nonsensical. They're all completely like throwing this man back into the news. And I assume this has to do similar to with the market manipulation that we saw before with the entire FTX fiasco, everything collapsing. Everyone has to be scared of the cryptocurrency space kind of news. Recently in the news, it's been announced that cryptocurrency prices are going to collapse. Cryptocurrency prices are going to fall. Everyone's supposed to be really scared, get as scared as humanly possible because something terrible is about to happen. Analytics firm Into the Block is warning that one bankrupt crypto firm holding billions of dollars of crypto assets could trigger cascading prices. In a very quick side note. This isn't even a side note. It is the main note. Liquidity is a very powerful thing. When you talk about liquidity within the cryptocurrency space, it allows us as a community to not see a rapid collapse in prices for no actual reason. That is to say, in very blatant terms, Bitcoin has $500 billion of a market cap. $500 billion, 500 billion. I'm rounding up. Cool. If you sold $1 million worth of Bitcoin, Bitcoin's price would not move. It's because the market is liquid. It can absorb a sell order like that because there's probably going to be more buy orders at any given time. If someone tried to sell $100 million worth of Bitcoin, prices might fall by 0.25% just from that one sale alone, because Bitcoin still has $500 billion as its actual market cap, especially when it comes to daily volume of how much is being traded within that coin. It's going to have a very low impact on it. With a $500 billion market cap, if you sold $5 billion, it would logically have a 1 to 2% movement based on how quickly, how fast that coin was sold, the time of night it was sold. That is to say, are more buy and sell orders open during the day? Did people close them down as they went to bed? If it was during the day, a lot of the sale of those coins would also be absorbed by people who have open buy orders. If you've never been on a cryptocurrency exchange, never seen the actual buy and sell order area, we've gone over that before. Like it's like the red area and the green area. They're constantly always flashing. There's always a huge amount of buy orders at a certain point. That is to say, if people are buying coins or selling coins at a certain amount and it happens to fall under that number, these buy orders end up getting filled automatically, and then people get the coins that they wanted at that price. This is why we always hear about like a short squeeze sometimes. If you hear that prices have collapsed or fallen, usually people have buy orders at a certain amount, and therefore that event that should have triggered a cascading, devastating blow to the cryptocurrency market ends up being nothing, because all the negative attention, all the negative selling ends up being, you understand what I'm saying. The news here today is that apparently FTX is trying to recuperate funds that are owed to people, and they might be selling off a large amount of cryptocurrency. When I tell you this was everywhere, Everyone's talking about it as if it's supposed to be some monumental, brace yourself, hold on for dear life, though the cryptocurrency sky is falling kind of news. The only thing that will make this news actually relevant, I'm trying to figure out a nice way to say it. I have the words in my head, but I want to be nice about it. Is if other people who continue to remain uninformed willingly end up reading this news and not actually dig further to see exactly what this means. That is to say, even if FTX sold all of their crypto at one time, it should logically have nearly no negative effect on prices, except for potentially a 2 to 3% drop in actual prices. And you'll even see exactly what I mean. However, the way that the news works and the way that sensationalism works is that if this event does take place, people will panic because they're told to panic. I tell you about that often. The way that a lot of the news works is you are supposed to panic for every single little thing. This was also a major talking point back in 2017, 18, 19, and beginning of 2020 and 21. The idea of Mt. Gox. They have a lot of Bitcoin, and the idea is that if they give this Bitcoin back to the people who are owed their Bitcoin, these people may begin to sell their coins back onto the open market. We learned that there are apparently a lot of people, very rich people behind the scenes, who have already gotten in contact with some of the largest holders, and they said, if you sell to us over the counter. So it never hits a cryptocurrency exchange, and therefore prices won't go down. However, that wasn't enough for people who were making the actual articles, and the idea was that there was going to be a massive multi-billion-dollar sale of Bitcoin at the exact same time, the exact same day, by hundreds of people who were going to ruin the Bitcoin market. That's not how any of this actually works. So the news is, it says in a report, Into the Block's Lucas Moro says that traders are likely selling their holdings out of fear that FTX could liquidate their massive digital asset trove worth roughly around $3 billion. Otumuro zeroes in on the fact that FTX, for those of you who do not know, they hold a large amount of Ether and a large amount of Solana. That was the thing that was a major conversation point when the whole entire FTX thing was happening, is that apparently, allegedly, FTX holds so much Solana that they were allegedly the reason why the price was high in the first place. It was alleged that they were buying so much Solana that they were trying to keep the price propped up. And that's why you saw back then the price of Solana collapse, because people began to see that allegedly FTX had begun to sell off large amounts of Solana to be able to recuperate a lot of funds. That was kind of the crypto in the coffin for me, as far as like even thinking about talking about Solana. Nonetheless, their database crashing 13 times in 1 year, and people still talking about that Solana could take over Ethereum. I'm not sure what planet you're living on. It says, and I quote, a key factor behind the discretionary selling is likely to be FTX's upcoming liquidation of reportedly $3 billion in crypto. Though FTX has not reported when they will conduct these liquidations, it is likely that the market got spooked following their recent bridging activity. With both ETH and Solana being part of their holdings, it is plausible to believe that the lack of sustained price action in these assets is linked to front sellers from FTX and fewer buyers looking to buy and hold in anticipation of their liquidation. Or the cryptocurrency market is down. It's always down this way before the halving. And maybe that's the reason why prices haven't been skyrocketing, because we always cyclically have to wait for the exact same event for the Bitcoin halving to happen for prices to begin to move back up. I don't know how to make this any clearer to a lot of other people out there. Very popular news, or unpopular, if you will. It says FTX's impending $3 billion liquidation sparks fear among crypto investors. Nope, that's not at all what's actually happening. It's always the same. It's just a cycle. It's constantly the exact same thing. Especially, and now once again, here's a bit more logic. They have multiple different coins. It is not just Ethereum and Solana. Those are the two big names, and that's why they keep making it into all the articles. They're probably only going to have around $1 billion worth of Ether. Selling $1 billion worth of Ether into Ether's market cap should not logically have a major effect on the price. But you know what will? The day that we figure out that they did sell, it's going to be the most popular news story of the day. And everyone who thinks that they're a good trader or trying to get ahead of the market will begin to sell. And that's what creates the cascade. Then this ends up making it onto the news that FTX, Sam Bankman-Fried is still haunting the market. Nope. It's all just a play. The point of all of this is to get you out of the market. I can't stress that enough. You can even, if you want to, because I know a lot of times I say something that may seem completely insane. If you have, the drive in you, find my videos from 2018, 2019. The exact same thing is happening. The exact same movements. It's almost a literal play-by-play. By the time in 18 or 19? I don't remember. Where we had Bitcoin Cash, Satoshi's Vision, actually launching as a coin, the cryptocurrency market and Bitcoin's price fell by 50%. Like, it was a very dramatic movement down. And I noticed the exact same thing a couple of months ago, roughly around the exact same time, once again, where BSV was actually launched. The news became very negative on Bitcoin's price, that Bitcoin was going to fall. Something terrible was happening. Bitcoin can't sustain these movements. And that's when Bitcoin fell down from, I think, 33,000 to around 27, 28. And you might remember a lot of the news we were getting at that time was like Bitcoin's falling down to 12,000, Bitcoin's falling down to 15. It's to terrify you. People can trigger sells, make news about it, and make it become like the most talked about thing. FTX, oh my gosh, they have $3 billion worth of crypto. What does that have to do with every other altcoin? Imagine for a moment, there was a $3 billion liquidation of Cardano. Cardano and Tron. Should the entire cryptocurrency market also cascade down as well? Right. So it's just FTX news once again, being all over the place as it is excessively prominent once again, and the news that people keep trying to make news. For those of you not looking at the screen, it says FTX holds $1.16 billion in Solana and $200 million in real estate in the Bahamas. I show you this because I want you to understand exactly how dumb the news has become. I really want you to know that other companies that have billions of dollars, they exist. That's one. I think we can all agree on that one. Two, companies that have billions of dollars, they spend their money. Come on. We can all agree on that one. Cool. Number three, companies that deal in finance, that deal in money, that deal in anything that have billions of dollars, all their holdings are not just in US dollars in a bank account. We can also all agree on that as well, right? When you talk about Elon Musk's net worth, this man does not have $100 billion in US dollars in a bank account. No, he owns yachts. He owns tons of property. He owns probably tons of other foreign currencies as well. He owns tons of stock, a lot of bonds as well. It's not just ever in one thing. So we keep hearing, and there's constantly news that FTX, people are looking through their finances and people are constantly shocked that these people had cars, luxury cars, that they own real estate. And it ends up being this like very controversial thing that that's how all companies work. I'm going to leave it there because there's a lot more that I can say, but I know that it would radically ruffle a lot of feathers for people out there listening. Whatever, and I'll leave you with this. There are a lot of institutions in the world that do not just deal in finance. If you hear about how rich that they are, start looking at the assets that they actually hold. I mentioned all of that to you before. If you get a chance, here's a really good one. Look into the assets that the Vatican holds. And that's just one out of like hundreds of institutions. They hold more than just like chairs and like pictures, right? Anyway, yeah, very weird news constantly coming out of the cryptocurrency space. This is a near exact mimic of what it was years ago. This news is meant to terrify you. Why news about peanut butter sandwiches and Sam Bankman-Fried's laptop battery keep making it into the news? And the fact that FTX is holding crypto and real estate? I do sincerely hope that you have all enjoyed. I do hope that you all are having a great day, great morning, great afternoon, or great evening, wherever you are, wherever the heck you might be. I do hope it is absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and or supporting. And I will most certainly be talking to you all soon. See you.